So next up, we have our crypto VC panel, moderated by Alex Thorn from Avon Ventures, featuring Jill Carlson from Slow Ventures, Nick Carter from Castle Island Ventures, and Brayton Williams from Boost VC. Over to you, Alex.
Thanks, Rhea. Really appreciate it, and really excited for this panel. I see Jill and Nick, and then here comes Brayton as well. Great. Before we get started, I'd love to ask each panelist to introduce themselves, and I'm just going to go by the order I see on my screen. So Jill, would you go first?
Yeah, happily. Thanks for having us. It's great to be here. So my name is Jill Carlson. I am an investor with Slow Ventures. We are a seed stage venture fund based in San Francisco, although whatever that means at this point, we're all kind of distributed around at this point in the pandemic. But we're a generalist fund. So we invest in mainstream fintech, we invest in enterprise software, consumer products, you name it. But we also have a sizable portion of each fund that is dedicated to investing in the crypto space. So that means everything from protocols to infrastructure, everything in between. I've worked with a number of crypto companies in various capacities and various spaces of the industry over the years, in addition to co-founding an initiative called the Open Money Initiative. We're a nonprofit research organization that looks at how money is used in closed economies. So happy to be here. Thank you.
Thanks, Jill. Nick, do you want to go next?
Sure, and thanks for the invitation. Also very, very pleased to be participating in this. So I'm a partner at Castle Island Ventures, former Fidelity, so very proud to be a Fidelity alum, of course. We are a seed stage fund based here in Boston. We're a specialist fund. We're focused on startups in the public blockchain industry and adjacent. In particular, the intersection between financial services and public blockchains. And I'm also the co-founder of Coinmetrics, which is a blockchain analytics project, startup rather.
Thanks, Nick. And Brayton.
Hey, I'm Brayton Williams, co-founder of Boost VC. We write the first 500K into sci-fi founders, and then we use crypto as one of those sci-fi future things we want to see built. That was actually our first sector focus back in 2013. So we've kind of seen the evolution of whether it's the founders kind of archetype changing over time to the types of businesses, and finally some traction kind of coming into play now. I spend my time mostly investing in the crypto space and actively advising companies like Etherscan, MyCrypto, Aragon, and Thesis more actively. And yeah, great to be here.
Awesome. Really happy to have the three of you here to talk about privacy and investing. As Rhea said, I'm Alex Thorn. I'm an investor at Avon Ventures, which is the Fidelity affiliated early stage venture fund investing in the public blockchain space. Look, let's just start right off the bat with a very general question. Each of you invest in early stage companies. How do you view privacy as a sort of sector opportunity? Is there one? And what are you seeing out there? Is there an opportunity to build companies in the privacy space? Anyone that wants to start, blink twice or raise your hand.
I'll hop in with just kind of the high level of how I think about investing generally. And then, I'm sure we can get into more specifics as we go, but, investing at the earliest stage of companies, other people have said it better than I can probably, but you're not investing for today, you're investing for the future, right? By the time these companies are the big meaningful forces that you think they'll be in the world, it's going to be 10 years down the line. And so you always have to be in that mindset of sort of where is the puck going? What will the world look like in 10 years? And what will be the demand at that point? And so for me, privacy plays a huge role in that, whether it's, narratives that we've seen in kind of our own backyard here in the United States around the importance of privacy, obviously around the election, the last cycle, Facebook, Cambridge Analytica, sort of a heightened sense of the importance of ownership of your own data, whether that's in other places around the world, obviously China with sort of social credit systems and things that to me, to us, I think a lot of us in the United States feel very dystopian, seeing sort of that is the present and projecting forward as to what's going to happen there. And so, I think that there's a lot to be said for just the not only heightened today, but rising importance of privacy as we look to the future. And so to that end, privacy is certainly a huge focus for me. We've invested in privacy coins and privacy protocols, but it's also something that I bring to the table as I'm looking at things outside of the cryptocurrency space.
Yeah, and I probably focus less on the pure privacy aspect and more on the bringing the control back to the user, which I think is privacy in its own way. I looked up the definition of privacy right before this, the state of being free from being observed or disturbed by other people. And it's one of those, so we're investors in companies like Casa or another one's like Unstoppable Domain. So, you have your identity can be truly yours, your assets can be truly yours. And I think it's not exactly the privacy play most people think about, but having control over your own assets and not having to rely on another party either to kind of control the movements you do so you can do them privately, or having other people know exactly what you do each time, whether that's a regulator or kind of a corporation or someone at that corporation. So I think we spend more time thinking about that than pure privacy. Although I love some of the privacy coins.
Data sovereignty
and future
and
things.
Ownership over your own data. We'll get into that more. That's interesting. Nick, do you want to add something?
So to build on what Brayton says, I mean, we're solely focused on the crypto industry, and I mean the word crypto means obscure, right? That's the foundation of everything we're doing here. I think privacy is integral to the notion of creating digital cash. To the extent that we're successful at creating digital cash, one of the key attributes of that cash is privacy. The other attributes are kind of immediate final settlement and autonomy. But to the extent that we're trying to recreate a cash-like experience in the digital domain, privacy necessarily has to be a part of that because cash itself is private. And we've lost that privacy over the last 40 years. We've lost those nice assurances of physical cash. Governments everywhere worldwide are trying to discourage the usage of cash, and they're trying to create panopticon digital payment systems which collect a huge amount of metadata. So to me, the whole objective of the entire crypto industry is to restore our right to transactional privacy. It just so happens to be in a digital context, so modernizing cash. And I don't think we're there yet. I don't think we're even remotely close to being there yet. But we do invest directly in privacy-focused businesses. That's definitely a core consideration for us. We're investors in a blockchain adjacent business called Moneto, which aims to give consumers the ability to reach into the databases of companies that own or control their information and have more discretion over what they do with that information. Along with Brayton, we're investors in Casa, and privacy is a key consideration there. The whole point is empowering individuals to custody their assets on their own, and obviously maintaining very strong privacy controls and harvesting as little data as possible is key to the notion of self-custody. We couldn't possibly have a world where everyone's was known to be a Bitcoin holder or they're on some sort of public database, because at that point you don't have any protection from authorities or anybody that wants to do you harm. So privacy is just natively entangled with what we're trying to do here.
And I was adding something. The digital cash, it's something that I think people talk about a lot, but we haven't really seen digital cash. So payments, it's the coffee versus store of value narratives going on. We don't see a lot of the payments. It's starting to increase. And I think, as Jill was saying, invest in the future. I think a lot of these privacy coins will be ready for that digital cash experience. But right now, I almost think it's too early, really in the cash. So butchered way of saying, privacy coins are coming for the digital cash narrative, but right now, I don't think privacy is as important today.
Let's talk about whether privacy is important. I'd love to understand what you guys see and as investors in the marketplace? Is there a rising tide of demand for privacy features or products? And I guess the sort of corollary is, are you seeing, startups and early stage companies that you interact with and that pitch you guys for investments? Are you seeing them, make privacy a core feature, or even just something that's important?
I would say that there's a more awareness of the importance of privacy among consumers today. The biggest company in the world, Apple, has privacy as a key part of their mandate. And that's one of the reasons I'm comfortable using Apple. You also have scandals like, TikTok. A huge amount of the discourse is focused around their kind of very aggressive approach to collecting user data. So I think some people are complacent about it, or they feel overwhelmed. But at the very least, there's an awareness among US consumers that privacy is kind of a very key consideration. And we're seeing the largest company in the world make privacy an explicit part of their brand. Their competitors aren't really doing that, but they are. So I do think it's going to be a distinguishing factor. I think there's going to be regulatory forces. I think we're going to get our version of GDPR in this country, probably something even more expansive than that enshrines the consumer right to privacy. I don't know exactly what form that regulation is going to take, but I think that's going to be a strong tailwind. So yeah, the short answer is yes, we're seeing more startups that have privacy as an explicit part of their mandate. Although we have a sample bias because virtually everything we see is crypto related, and crypto folks are just more paranoid by their very nature.
That we are. I'll share maybe a slightly different experience from what Nick just shared. And that's the following, which is that I think amongst consumer companies that I speak to, I haven't yet seen them share a strong demand from their user base around privacy. And in a way, that's very disheartening to me, right? As one of these paranoid crypto people who Nick is alluding to. There is, and studies show this as well, there is a huge difference between the stated preference of people when it comes to this. So if you survey people and you ask them, oh, do you care about privacy? If you have a camera in your home, is this a top consideration for you? They'll say, yes, of course it is. But then when it comes to their actual behavior, very often these things do not line up, right? But that said, I think that there are three very important considerations here, one of which Nick mentioned, of course, which is regulatory. Given the scrutiny and kind of the fallout of the last few years and sort of the tech backlash, there is a lot of regulation coming down the line in the United States. There is a lot of regulation around privacy that's already been implemented in other jurisdictions. And so that's an important trend. Another important trend is, I think, companies just viewing this as a real liability and therefore prioritizing privacy, despite the fact that perhaps they're not even seeing that demand directly from consumers. They know it's going to be a liability down the line. And then the third thing is, with Apple's marketing around privacy, I tend to view it primarily as almost a consumer education process that they've initiated. And I think that looking forward again to the future, I think that as that consumer education continues and people do start to understand more and more of the implications on this, that this could have on their everyday lives, I think that we may see, I'm optimistic that we may see some of the consumer behavior actually end up shifting around this. So that's I think a slightly different perspective, but nonetheless, still a very important space to be focused on for the future.
Brayton, I see your head nodding.
Yeah, no, I think I've seen the same thing as Jill. There's not a ton of consumer demand. I think in the early crypto days, it was much more fringe. So you had much more extreme founders, and privacy was the most important thing to them. And the thing that we've been battling for 5 years with a lot of our founders is, if you don't track anything, you have no idea what your customers are doing with your product. You have to, running a startup is very similar, whether you're in crypto or not. You have to build something someone wants and loves and will use. So if you're not tracking anything, you don't really know how you're using their product. And if you don't have any data on them, you can't call them. Talk to your customers is a super important thing in building any startup. So that's something that we've just clashed on with founders for a long time. And I think the more and more almost your mainstream tech founders jumping into crypto has helped kind of products generally. And I think we're seeing a much higher caliber of products in crypto right now. But I think a lot of that is because the privacy bar has come down a little bit to collect a little more data, whether on what the user behaviors are or just the information to speak to those users. So I think it's a net positive for everyone, because again, as Jill was saying, if the consumers are not demanding pure privacy, we don't need to insert privacy for privacy's sake.
What would the barriers be? I think that's really interesting perspectives. You know, what is causing that discrepancy between what consumers are saying they want versus what I guess they're paying for? Is it just purely a convenience versus privacy type of trade-off? Like, I mean, if we were to see, you know, is that why Apple's, you know, succeeding with this privacy message, because their product is, it's actually not a privacy product, right? It's a phone with an operating system, and privacy is just sort of a convenient also had. I mean, is it really convenience?
Well, I think Apple has success because they bundle so many services together, and they try to ensure a strong level of privacy throughout that experience. And they default you into it as well. It's, you know, fairly seamless. Whereas if you go beyond that, so I mean, they have a special position because, you know, 80% of my digital life is mediated through Apple, right? That other companies don't have that privilege, so they can only affect a user's privacy in some narrow domain. But that's not sufficient, because to really, you know, work at and ensure privacy, you have to cover all your bases. And so I think it can be absolutely overwhelming from a consumer standpoint to try and enshrine your online privacy right and to release as little data as possible, and to, you know, manage your online footprint. I think that is an overwhelmingly difficult task. And then there's also the fact that more private services tend to have a worse user experience fundamentally. I use Signal a lot, but Signal doesn't have the best UX, unfortunately. So unless you have a near monopoly over users' kind of online self, I think they're going to have an extremely hard time practically attaining privacy.
I would also say on the Apple point, Nick, I think that you bring up a lot of very salient and interesting points there. I think Apple also just has the benefit over a lot of other companies that we might be able to talk about here, Facebook, Google, et cetera, of just being a very different business model, right? Of, you know, they are selling hardware products to people. It's less of a matter of having like this real-time data feedback loop of how to optimize their software product for the ability to tailor it to an individual consumer, which is all that Facebook and Google are doing, right? And their entire value prop in terms of ad sales. But, you know, to give another example, if you look at some of the Apple products where they could benefit from that sort of more real-time data feedback loop and forsaking some of the privacy, I would argue they're actually falling behind some of their competitors. And so you look at a product like Siri, right? I have all of the Siri HomePod stuff in my home because, again, I'm one of these privacy freaks, and I would rather have that than a Google Home or an Alexa from that perspective. But candidly, I've used Alexa, and I can tell you Siri is probably a worse experience. But it's a trade-off that I'm willing to make because of the privacy issue. And so I do think it comes down to a matter of convenience, but then also you have to think about the constraints that each of these companies are in with regards to their business models and what they can do and the trade-offs that they can make in terms of privacy and data.
So crypto consumers right now, especially in this DeFi movement, care about one thing: making money or not losing their money. So when you think of privacy, a lot of these, privacy is not the core product. It's a feature that enables people to make more money or not lose their money. So the example would be kind of Uniswap here. Not tracking consumer data is really good when you're trying to sidestep maybe regulators or the tax man trading certain assets that maybe won't be listed on your big exchanges that aren't just private. So I think that's obviously we're seeing an explosion here. The DeFi movement has been one of the greatest fintech sandboxes I think we've ever seen take off. And a lot of that is because there's this kind of gray zone, kind of this privacy aspect to it. And then some other things would be, self-sovereignty would be, privacy in a way that they're trying not to lose my money. So I think I'm trying to say that is more secure than putting it on an exchange. Or dark pools. Dark pool is going to enable me to make more money. So I think we need to, again, it's the greed that people want, and will the privacy feature help in that greed kind of coming to fruition?
Just to add to that, I think that's such an interesting point on Uniswap. I mean, it's kind of interesting because you obviously don't have to KYC to use Uniswap. So in theory, you've good privacy protections there. That lack of an encumbrance is clearly one of the main value propositions. That's why people love it. That said, like, you don't have strong privacy using Ethereum, at least in the conventional way. It's very possible to slip up and make a mistake and then effectively dox yourself and connect your identity to all your trades. And in fact, I mean, we see people will, track the trades of successful large traders and then mirror them or ascertain their position sizes. We even saw something really fascinating, which was Zeus Capital had their short on Chainlink. People went on chain to determine where their stops were, and that became kind of a collective enterprise to sort of liquidate their short position because they knew exactly the right threshold.
Right.
So you also have weird, circumstances that emerge where the pseudonymity is breached and your identity does get connected to your positions. So I think the missing piece there is the ability to actually trade privately on chain. And I'm fairly optimistic that we actually will get that in the fairly near future, which would, really dramatically enhance the prospects there.
Let's talk about that more. Just for background for some in the audience who may not be aware, Uniswap is an automated market maker. So a type of a decentralized exchange that runs fully on the Ethereum blockchain. I think, Nick, one of your points is that, program software, smart contracts that run on chain, where that chain doesn't, have privacy preserving features, actually exposes a lot of activity there. Let's talk about Bitcoin. Brayton's got his Satoshi shirt on. We're all, I think, users and believers in Bitcoin. Bitcoin, I think, was wrongly viewed as a privacy preserving cryptocurrency when it, in its earlier days. I think, years of capture of criminals that have used Bitcoin shows that it's not. In fact, I would contend it's perhaps the most traceable currency ever created. Does that need to change for Bitcoin to become more successful, either as a bearer instrument or, digital cash in that sense, or should it change? What are the trade-offs in your view? Should Bitcoin become more private, or maybe that happens at a higher layer? Whether that's a higher protocol layer or, hardware or software tools that make Bitcoin more private. What do you think about that?
I can go first, I guess. I struggle with this a little bit. I sometimes wonder, what if Bitcoin had been created with confidential transactions natively? Because you didn't really need much beyond elliptic curves to do that. And we know that Satoshi was interested in privacy, as was Hal Finney. So it could have been the case that Bitcoin 1.0 came with transactional obscurity. Would Bitcoin have achieved the same stature that it did in its first decade? I think weirdly enough, the existence of that traceability and chainalysis meant that Bitcoin could institutionalize itself much faster, because a lot of these entities that are more regulated, they benefit from the ability to say, actually, hey, we do have this ability to surveil the chain and to ascertain the risk of a particular transaction and to find criminal behavior. I think that actually accelerated the institutionalization. which is maybe a little bit perverse, because then the question is, well, does that become the default for every single transaction? There's an expectation that to transact with, the key institutions in Bitcoin, there is a measure of surveillance, which is obviously antithetical to what Satoshi and the cypherpunks wanted. The other thing to note is that the predecessors to Bitcoin, I think, actually, if you go back and ask a lot of the people that are on that mailing list, they would say, hey, Bitcoin is a failure because it doesn't really enshrine user privacy very strongly. I mean, DigiCash was more committed to privacy, right? A lot of those schemes had strong anonymity encoded into them. A lot of the pre-Bitcoin digital cash schemes were more privacy focused than Bitcoin. So you could say that the digital cash kind of cypherpunk community accepted a really significant compromise with Bitcoin in that it was more traceable. So now the question is, are we going to be doomed into this kind of walled garden approach where transactions between VASPs and exchanges are totally surveilled and transparent, and to withdraw your funds from them, you have to make yourself known to them, which is kind of becoming a more likely prospect by the day, actually. So I don't know what the answer is, but it's making me a little nervous, the notion of Bitcoin bifurcating into the gray market and the white market Bitcoins. I know people have predicted it for a really long time, but we're kind of getting there now. So
interesting. Jill, do you want to offer thoughts here?
Yeah, I'll not stray into kind of normative statements here of what Bitcoin should or should not do, because that gets really ugly really quickly.
Right.
Although maybe you can push me there later. But I'll make a couple of predictions, which is that, first of all, I don't think that Bitcoin at sort of a protocol level is going to work meaningfully towards sort of obfuscation or privacy. I see that happening, however, at other sort of layers of the tech stack. I think that, again, as I look to the future in general, I think that pseudonyms and the ability to speak or transact or whatever under different names and personas is going to become an increasingly important part of the internet of the future. And I think that we'll see more emphasis being placed on people being able to act under pseudonyms, again, at different layers of the stack. And I think that will relate to how people relate to Bitcoin in terms of privacy. But then the other thing, I think Nick has it spot on, that so much of this issue is less about sort of the Bitcoin blockchain, and really like the first battle line that's been drawn has been about onboarding and on-ramping and off-ramping. And as you look at things like the travel rule, as you look at, even more, I might characterize it as kind of draconian KYC and AML procedures that are coming down the pipe, I really think that is going to be the first place that needs to be addressed in terms of addressing privacy as it relates to Bitcoin.
I think a lot of the issues brought up here are like, how do we make sure someone can have a bunch of assets, but make sure not everyone else knows that they have a bunch of assets? So I think there's going to be a lot of tools involved in that. So whether it's, even going under a pseudonym, I think is an interesting point that we're going to see a lot more of. Like Satoshi started it, and we got our first pitch the other day. It was a Zoom call with the founder. The founder was like, I might continue using my Twitter pseudonym and not really be public about it. And I was like, well, that's crazy to me. So I think, as your point, like we're going to see more of these. Even little things like, so I was on one of the kind of larger crypto projects. They have a lot in their kind of treasury, and we did a retreat, and it was very clear: don't post anything from their retreat, don't kind of say anything about their retreat, because basically everyone you needed was on the retreat. If you wanted to, $5 wrench attack, which is again the kind of big concern that we don't really know how to solve for. So I think there will be a lot of tools and people trying various things to solve the problem of kind of that $5 wrench attack.
That's fascinating. And just again, for the viewers, the $5 wrench attack, gosh, it's one of my favorite analogies or phrases in this space. We all know cryptography is extremely, well-designed cryptography is potentially impossible to break or break into or hack. So that's not always a great attack vector if you're trying to, say, steal someone's Bitcoin. But a much easier attack vector is to walk down to Home Depot, pick up a wrench for $5, and then just beat someone up until they give you their Bitcoin. That's the $5 wrench attack. And it's a great segue because I wanted to ask each of you who are public figures, at least, you're not hiding behind pseudonyms. And I don't want to say that as a negative, by the way. I support the use of pseudonyms for privacy, absolutely. But I mean, you're not using them, and you're.
So you think I might just be the sock puppet for somebody else, Alex?
You might actually have a totally different name, Jill. As far as I know, that could be a pseudonym that you're using. But how do you stay secure? Each of you, and what's, do you take steps or, without revealing your operational security, like how?
I could tell you, but I'd have to kill you, right?
Yeah. Is it a concern for you? I follow Jill. I know that she owns Bitcoin just from following her content, right? I mean, is that a risk?
Totally, it is. And I mean, it is one of these kind of awkward things to try and talk about and share, because one of the best practices, it's sort of like the first rule of Fight Club, you don't talk about Fight Club, right? But at the same time, it's something that I've always been cognizant of, like, for people coming into the space, and especially for those sort of very publicly building or contributing to the space, it's something that needs to be thought about. I would point to, Nick and Brayton both mentioned CASA. So one of the team members there, Jameson Lopp, I think has posted, to me anyway, some of the most helpful content as to how to think about these attack vectors. But it's certainly something that you have to think very carefully about. Even small things of, for example, on Twitter anyway, I try to never post sort of any content that could too closely identify sort of like where I live or where to find me, outside of sort of like the general Bay Area. Even things like that, being cognizant of it, it is just a very different mindset from anything I ever would have imagined myself to have as, a young working professional in the city. But
yeah, I'll add to that. I mean, if you're even a moderately high profile person in this industry, you have to be extremely cognizant of these issues. I won't go through all my kind of mitigations because you shouldn't reveal your OPSEC practices. But a lot of it has to do with, don't talk about when you're on holiday. Don't post a .eth address in your profile and then make transactions. Just don't post your own transactions on social media. People can obviously trace this back to determine your assets. Take personal safety very seriously. It's kind of, I think, an unfair burden for people that are, active in the crypto industry. The fact that there's a constant threat of being SIM swapped, constant threat, even if you don't have assets on an exchange that are in a wallet that could potentially be exploited with phone-based two-factor, which I would pray that nobody is in that situation, because that'd be crazy. Even if that's not the case, getting SIM swapped is incredibly disruptive and terrifying. And I think it's effectively, people just take it for granted that it's going to happen to them at this point, because the major carriers are so irresponsible and they haven't hardened themselves to that key man risk. Most of the SIM swappings are inside jobs at this point. So yeah, I mean, it's a totally crazy burden to be a public person in the crypto industry. This is an industry where people own bearer assets. So it's like you've, hundreds of thousands of dollars of cash under your mattress, effectively the same thing. So yeah, I don't know. I used to be pseudonymous on Twitter back in 2017, and then I made the bad decision to become public.
Fascinating. Yeah, I too was pseudonymous before I made a public facing Twitter account in 2017. It's hard. I can see as an investor in particular in early stage companies, you can't be anonymous. People have to come and find you. You have to be a beacon for early stage founders to bring you their ideas and their companies. So very different than, say, if you're a general advocate for the space or the technology. We have 5 minutes left. I'm trying to decide where I think we should take this. Part of what I'm hearing, I think, from the group, and I would agree, is that privacy isn't, despite what people, consumers, and whether it's abroad with the CCP or other authoritarian situations like what Alex Gladstein spoke about yesterday, or domestically with Edward Snowden's revelations, or even just the mass marketing databases we know exist. It's clear that privacy is probably, at least technological internet privacy is sort of at the forefront of the discussion where it hasn't been in the past. But at the same time, I'm not hearing a lot about whether we think businesses can really be built around privacy today. And even Apple, as an example, this is a very late stage company. I guess you could say maybe even the latest stage company. It's the largest company in the world by market cap. It sounds like the trade-offs to building around privacy at an early stage might be prohibitive for most companies, or a lot of companies. And yeah.
Oh, I have so many thoughts here, but I'll hop in just with one very quick example and then hand it off, which is Keybase, right? Where Keybase was built, is a product really built around privacy. It's kind of an identity solution, a messaging solution. And it was really created with everything that we're talking about very core to the DNA of it. And I think that they, as a company, received a lot of skepticism for some period of time of sort of like, okay, how do you ever monetize this? You're missing a lot of the sort of feedback loops, even in terms of product development that other companies have and that you probably want. And then, lo and behold, COVID happens, Zoom takes off, Zoom comes under a degree of scrutiny that they probably never would have anticipated at this point in their life cycle. A lot of that scrutiny is around privacy concerns, is around even like geopolitical concerns, like you mentioned, Alex. Lo and behold, Keybase gets acquired. It's a great outcome for everyone involved. And so that's the first thing that comes to mind for me. I think increasingly, as we see the narratives around this shift, I think companies can be built around privacy. And I think that's a great early example.
Yeah, I mean, first of all, I'll say unequivocally, yes, I think, part of entrepreneurship is timing. And are we at a moment in history where privacy is becoming more paramount and more important? Absolutely. So I don't exactly know what the business models are going to look like, but I think in terms of being thematically right, like, yes, now is a good time to start a privacy focused business. That said, a lot of the ones in the crypto industry that involve novel cryptography or creating new privacy features and really building that into the DNA of the company did struggle to monetize historically. I mean, I'd say Keybase is actually a good example. Aside from the acquisition, which was kind of a bolt from the blue, there are struggles monetizing. If you look at the most popular privacy products in the world today, Telegram and Signal is funded basically by a nonprofit, which takes funds from large public companies which benefit from their technology, and they donate to the nonprofit. Telegram didn't really have a monetization strategy. They did enormous ICO, which they had to roll back. So we see the, for instance, like other novel cryptography that's privacy focused, like Zcash, their way to monetize that was through the creation of a protocol and a token, which, obviously introduces a huge number of other complexities. I don't think it's necessarily appropriate to create a token every time you need to build out some new cryptographic primitive. That might have been a popular idea back in 2017, 18. I think we've realized that's probably not going to work. So that is one issue, is that a lot of these cutting edge cryptographic focused enterprises may not actually be compatible with a corporate business model by their very nature. Maybe that's R&D that has to be underwritten by some other larger institution that benefits from the existence of that R&D, kind of the way that Signal works. But I mean, there's enormous challenges monetizing this kind of new cryptographic primitives.
So on the timing piece, totally agree with Nick. People care about privacy once they've been personally affected. And that's when people are really willing to pay. And as you know, the first iteration on the internet was data. You lose some data, people are upset. And that's, I think, one thing. But now that we have this digital money on the internet, and if you lose digital money, you know, losing data, that sucks. You know, losing money, terrible.
Yeah,
So
no
I think we're
recourse.
going to see more and more. I know more people who have lost money, crypto in some way, and they are the ones willing to pay. Again, going back to that greed thing, to protect their money. Protecting data is different than protecting money. So I think the timing is starting now, and I think it's going to only get better.
That's great. And I actually realized I was wrong. We have 5 more minutes. So just on that point, Brayton, people willing
Encore.
to pay. Yeah, I'd love to. You know, another thing we've talked about throughout here is, you know, and Nick mentioned it, Jill, you've all mentioned it, is how to actually, you know, monetize a privacy feature, right? Or if you're a privacy company, let's say you don't collect your customers' data at all, right? Let's say you don't. So much of the sort of modern internet behemoth business model has been built around aggregating and selling to marketers personal information, right? So to not collect it, right, or to not sell it as a way of generating revenue, that's a sea change in behavior, and that have we seen? I don't think we've actually seen it succeed at scale. Certainly not when compared to, say, you know, I mean, not at the Googles or Facebooks or you know, at big scale yet. What types of business models are there? Are we talking about, like, you know, subscription-based services?
So the business models working in crypto are taking a piece of transactions. So your exchanges of the world, your custodies of the world. If money's moving hands, and again, if someone's making money on it, you just take a piece. Even I think one of the new emergents being like the staking providers. Staking companies come in, they make you money, they take a little piece of it. So I think anyone who's figured out that has a clear business model. I totally agree that the rest of the business models where there isn't money changing hands regularly or a huge piece of value being custodied or protected, still uncertain. And yeah, we'd love to hear what other people are thinking there.
I mean, I guess, you know, creating a product that users love and then also enshrining building privacy into it, especially if the monetization model isn't this kind of information aggregation thing. So Apple, great example, you know, they sell operating systems and hardware. So certainly hardware providers could build privacy into their system by design. I think Helm would be a good example. They try and build kind of email servers and cloud storage that's sort of natively private. That's a physical hardware product. You know, there's plenty of kind of Bitcoin wallet companies out there that are focused on physical hardware, and they're also pretty privacy focused. So the business models exist. One interesting example would be models which are reactions to this highly data collection subscription-based models. So this is something I've wanted to see for a long time. I've never really seen it implemented well, but it would be an alternative to subscription-based payments for content online. You know, using something like Lightning or some other kind of payments protocol online, you could have people pay for content on a kind of per click basis instead of paying for content on a subscription basis, the way that it kind of currently works with paying for media content. So that would, by definition, enshrine more user privacy, because you don't have to have an ongoing relationship with some provider in order to, you know, unlock that content. So that's kind of one of the things that internet native, fast settling payments achieves. You know, there's new business models that emerge, but we haven't really seen that been taken advantage of yet. And the default way to pay things online is through effectively credit card based subscriptions.
Mm-hmm.
I'll just say very simply, for me, there's sort of the world of crypto and then the world that I invest in outside of crypto. I would say outside of crypto, the easiest case for me to make around building a privacy tool today as a startup is in the B2B world. So selling into enterprises. So very much with a view towards the anecdote that I just mentioned about Zoom and Keybase. I think more and more enterprises are going to have to be figuring out how to pivot in this direction. So I think that that's very compelling, whether that's on sort of like a GDPR compliance side, a tool around that, or even outside of compliance, just sort of doing right by users. So the B2B world, I think, is very compelling. And then within crypto, honestly, I remain very optimistic and excited about sort of all manner of things. Again, ranging from privacy coins like Beanstalk to protocols like Tari. I know Fluffy Pony is going to be speaking a little bit later. I'm excited to tune back in for that. Because I think that, crypto, as Nick mentioned earlier, tends to serve populations that actually care about this. And I think that there's a huge opportunity there. Think about every black market or gray market in the world. There's a huge market opportunity, right? And I think that, I think going in and finding ways to serve those is something that the crypto ecosystem is already doing. And so I think that there are a number of ways to approach that from this side.
Awesome. Any closing thoughts? And I know we kind of already did this 5 minutes ago, but if there's anything else you'd like to add, do it now. We're at time.
I'll just say thanks so much for hosting this. This has been really fun. And here's to a brighter future around privacy. I'd love to see that.
Yeah, absolutely.
Yeah, thanks.
Yeah,
Great.
I'll briefly say, if you look at the previous FCAT conferences, they were kind of ahead of their time a little bit. L2 2 years ago. Now L2s are like totally blossoming. So maybe it'll be the same for this one in a couple of years. Privacy will be ubiquitous in the startup landscape.
Let's hope. I really appreciate each of you joining us, and thank you so much for your insights and your continued work in the industry.
Thank you.
Thanks.
Thank you guys so much. That was an incredible first panel of day 2. And I love that you touched upon a theme that we'll be revisiting in our last panel today, which is this idea that privacy can be a competitive advantage for companies that can offer it in addition to a strong customer experience. Specifically, you talked about Apple.